Let's go around the bell now with Noah Hamman, CEO AdvisorShares, and Chris Pollard, Head of Market Strategy at Cowen and Company. Yahoo Finance's Heidi Chung is manning the Wi-Fi Interactive board. Noah, let me start with you real quickly. We're trying to get the market's trying to make a bottom here. Do you think the bottom is in?
No, I don't think so. With so much uncertainty ahead, I think there's a lot of challenges ahead, so we continue to be cautious and defensive.
No, and so far it looks like you can feel that nervousness in the markets here as we come up against the opening bell. And there is the opening bell.
All right, here we have the opening bell at the New York Stock Exchange, and there's a lot of applause for the company that's ringing the bell. We'll see if there's actually applause here for the stock market. We see the Dow Jones Industrial Average starting the day up better than 200 points. Chris, I'd like to give this one to you. There are some encouraging signs here. Late Friday, we saw the Nasdaq pop into the green. We saw a lot of the coronavirus-sensitive stocks like travel companies, TripAdvisor, for instance, Booking Holdings, also cruise lines. Their stocks started to come back. Is that a sign to you that we are at least near a bottom in this market?
I think I would agree with Noah's initial sentiments here in that we're not completely out of the woods. What I do think is important to keep in mind is that the equity complex last week was very late to discounting what the rest of global risk had been telling us for quite some time, whether it was bonds, the dollar, precious metals, or growth-centric commodities. The market, by and large, had been telling us that this situation was going to deteriorate. Equities only just caught down to that last week. I would expect some two-way action in the near term, though I don't think we're out of the woods, and I do think that any near-term bounce is unlikely to hold, at least over the coming week or so.
Heidi, over to you at the Wi-Fi Interactive board.
Good morning, Brian. Yeah, futures were actually quite volatile in the overnight session, but all three of the major indices higher this morning, up about 1% each. The Dow Jones Industrial Average up 233 points now. Now, these are early gains, so we have no idea how the market will close. But of course, this comes after last week, stocks logged their worst week since the financial crisis. So looking to stage sort of a rebound here. I do want to mention the Volatility Index, also known as the fear gauge, backing away from that 40 level we saw on Friday. Just about an hour ago, we were at 41, but we have backed away from those levels at about 38.54 right now. Also looking at the 10-year Treasury yield, we have backed away from the record lows that we hit during the overnight session. We are at about 1.09%. And again, we are looking at different movers here in the major indices. As you can see, let's take a look at the S&P 500 sectors. All of the sectors in the green here, but outperforming the broader index. We have tech up 2%, as well industrials right under 2% here, Brian.
Noah, I am curious what you are doing right now. What are your clients telling you, and are you hedging this market? And if so, how are you doing it?
Yeah, absolutely. They're nervous. We have seen some stocks do okay in this turmoil we've had as of late. But there's a couple of tools that we use that we talk to clients about. One is by the team from Dorsey Wright. They manage a hedging strategy. They short equities, but not all the equities in the market. Only a basket of equities that they feel like are demonstrating relative weakness. So maybe companies like a Viacom or maybe even an Interactive Brokers are two examples of shorts in that portfolio. The ticker symbol for that ETF that we use is DWSH.
Chris, let's get you back in here. Are you suggesting to clients get back in the mix here, do some bottom fishing?
No, I think what we would be suggesting is if you're worried about the situation getting worse, take a deep breath. Know that this volatility is going to be two ways. I think one of the important things here is that the nominal yield complex has really been discounting an immediate response from the monetary authorities, and that's something that we don't believe is in the cards, at least right now. We do expect to see some easing as we get into the March central bank meeting season, but we don't expect an off-meeting cut or a cut of, say, 50 basis points here. I think one of the counterintuitive results of that is that as the nominal yield complex starts to price out some of those immediate fears of immediate hopes of a policy response, that you'll actually see the nominal yield complex rise, and that will help to at least lift some of the near-term pressure on equities. It is that movement in equities to the upside that we're anticipating that we would use to set hedges, to thin out on less conviction long ideas, because as we did mention, we do believe this volatility is not yet over.
You know, Chris, President Trump said he believes the stock market can bounce back and once again look to the Federal Reserve to cut interest rates here. He also said, in his words, a pretty major middle income tax cut was being considered in the not too distant future. At the end of the day, what would those moves really do for this market if the issue is a supply chain issue, if there is the demand but we don't have the supply?
Yeah, so look, the fragile sentiment in the market would benefit from a policy easing from the central banks, but that's not how you cure a demand shock. The demand shock requires fiscal action. The merits of a tax plan, consumption trends have been strong for some time, so it's debatable as to whether a tax cut on its own is going to be what we need to get out of this, but thinking about the fiscal side of the ledger is really what the coordinated global response to this is going to need to be.
Noah, how worried are you about a mid-year recession in the U.S.?
I'm not too worried. I mean, we might technically hit it from a true definition perspective, but, we look at maybe the interest rate environment a little bit different, right? Think about what drove the action on Friday. It seemed to be Chairman Powell's comments about how they're closely looking at it. So for clients who don't want to hedge or don't like shorting, don't feel comfortable doing it, we've also been suggesting something like a high quality, longer duration, like a TLT, which is the iShares 20-year plus Treasury ETF. That might be a great tool if the Fed is going to jump in, provide some liquidity to help us stay out of that recession. I think coming into this election year, there's a lot of people heavily incentivized to help keep us out of that if possible.
Heidi, let's get back over to you at the Wi-Fi Interactive Board. What are you looking at in the early going?
Alexis, we're seeing a lot more green on the board here in the heat map. As you can see, Apple up nearly 3%, and that is after an upgrade by Oppenheimer to outperform with a $320 price target. The firm's analyst noting that the tech giant will prove rather resilient against its competitors, even as we're in this time of uncertainty here. Walmart also up nearly 2%. And I want to mention that Verizon, our parent company, also scoring an upgrade on Wall Street, getting a boost up nearly 2% here in the early session. I do also want to point out the transports. We have been watching the transports very carefully as we have seen the coronavirus impact the tourism industry here. We're seeing the major airlines here in the red, underperforming, down more than 1.7% for JetBlue, down nearly 2% for Delta, and down 3% for United and American. Let's take a quick look at the Nasdaq here and what is moving. I'm going to switch this over to equal weight. And as you can see, JD.com, after reporting earnings, getting a big boost, up 7%. I also want to mention Tesla, because this company also getting a call on Wall Street, but it was a bearish call from Morgan Stanley's Adam Jonas. But the stock is still getting a 4% boost here in the early session. I also want to take a quick look here at the commodities. We can see crude oil also jumping about 2% here, trading at about $45.67 per barrel. We're seeing gold futures here also getting a boost as investors flock towards safety trades like gold at $15.93, hovering, we just hit 16 an ounce. Back over to you.
Chris, what would you compare this current trading environment to? I think you see a lot of average investors. They've really been shell-shocked the past week. But let's be honest here. This is not financial crisis stuff from 2008, 2009. Leverage in the system is completely different. Totally different situation.
Right. I would agree with that. I mean, the intensity of the move is very much in line with what we saw during the financial crisis. But the overall framework, whether it's the capital is underpinning the banking system, whether it's how the funding markets are operating, I think this is a period, again, I will go back to the point that the equity market was late to discounting what the rest of the global risk regime had been telling us for a number of weeks. I think that taking a deep breath and realizing that there was some emotion and some catch down involved in that is important. We are not out of the woods in terms of figuring out both what the macroeconomic demand impact is going to be, nor are we out of the woods in terms of figuring out how further revised to the downside earnings are going to have to be. That process will take some time, but this is not, in our opinion, the start of an immediate recession. I think it challenges what was already a precarious global macroeconomy footing, but it's one that I think can ultimately be addressed if the appropriate, say, fiscal response is deployed in tandem with a monetary regime.
Noah, I'd like to get your thoughts on gold, because it is rallying right now. It's about $1,600 an ounce, but that was not the case last week. It's a traditional hedge, we know, in times of uncertainty. And I'm hearing from some traders on the floor that might be because investors are trying to raise cash to make up for losses from stocks. So they were actually selling some of their holdings in gold. Do you buy that? Have you been hearing similar things?
Sure. I mean, we like gold as a defensive position, as a hedge, but not as the only tool. So you think about three different things that you can use. Gold certainly is one. Cash, as you mentioned, can be one. But if you're comfortable and you think, yields are going to be pushed down, back to the maybe longer duration that I mentioned. But cash, again, very defensive. And then in the inverse, the challenge with gold is what you saw on Friday when the market was still down, even though it rallied at the end of the day. Gold was actually not performing well that day either. So it's not a perfect hedge, but it's probably one of a few tools you can use to get defensive.
Noah, do you have any interest in wading back into the waters on stocks like Apple and Microsoft? At least to me, it seems like an opportunity to get into some names that haven't been at these valuations in 2-3 years.
I think so. Companies like that I think maybe will have less of an impact. I like, right? I'm not going to wade into a FedEx right now relative to transportation and travel and shipping, but companies that can conduct most of their business online and maybe are less affected by it seem to be priced at some attractive levels right now.
All right, Heidi, back over to you at the Wi-Fi Interactive board.
Alexis, very quickly, I just want to mention that stocks are losing a bit of steam here. The Dow only up about 74 points right now. The S&P 500 hovering right at 2963 here. And the Nasdaq Composite actually seeing the biggest jump, about 0.3%. It'll be interesting to see if we can hold on to these gains throughout the session. But for now, things are higher.
Market is looking a little shaky. Noah Hamman, Chris Pollard, Heidi Chung, thanks so much.
Thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.